hold on. Let's get the analysis going with our experts as well. Rina Sanghavi is joining us. She is a research analyst at VCK Shares and Stock Broking. Rina, if you've seen these initial numbers so far, what's the reaction? How are they looking like?
Yeah, the numbers looks great. It's better than expected. Like we have expected the net profit to go up 27%, but it has gone up to 28%. And even in the front of gross refining margin, if we see that we have expected $7.56 per barrel. And according to the news which are coming in, the company is quoting refining margin of 7.9. So I think that it's a very good achievement for the company. Like it's a great head. Refining margin has increased a lot, and refining revenue contributes almost 71% of the total revenue. And even in front of petchem margin, if we see petchem segment, all the polymer and product prices were down by 6 to 11%. But the petchem margins, petchem revenue has increased, and petchem EBIT, according to as I'm seeing that it is also increased. So basically, it is because only that the naphtha prices, which is a key raw material, its price was declined by 6%. And I think that is why the petchem revenue is also come better as expected, as against the product prices decline.
So the revival in the petchem business, how does that compare to your own estimates? Because Reliance has been struggling for the past couple of quarters on the petchem side particularly. We're getting a number of about 14.5 for the petchem margins. How do they compare with your own estimates?
Yeah, we have estimated 14% petchem margin, and it has come to 14.6%. So it is better than expected, and I think it's because the raw material prices were declined. That is why the margins are also declined in our expectation. But since the raw material prices declined, so margins has went up.
Okay. Talk about the GRMs have also actually shaped up. 7.9 is where it actually come in. What's the view on that?
Yeah, according to my view, the GRM is better than expected because we have expected $7.56 per barrel, and the GRM has increased because the kerosene and the diesel spread against the crude oil has increased in the quarter. And that is why the GRM is going. Again, the light and heavy crude differentials has also went up. Like it has increased by almost 65% on YOY basis, and it has marginally went up on QOQ basis to $2.8 per barrel. So because of this, the difference has increased between light and heavy crude. And again, as I told, the diesel and jet fuel crack spreads widen. And because of this, GRM has increased. And again, for the next quarter, like we are looking GRM to go down, as we believe that there is a shutdown in refinery for 4 weeks starting from October. So, like it may impact GRM, and refining revenue may come down. In the third quarter.
Rina, hold on to that thought. We have to discuss what happens next for Reliance.
Well, let me get Rina into this as well. Rina, now we're talking about the margins from petchem. Margins came in around about 14.6%. You got refining at 4.4%. That's for Q2. What's the outlook coming in terms of Q3?
Yeah, in Q3 we are expecting the results to be subdued. It's because although there is a refinery shutdown, and the capacity will decline from 1.24 million barrels per day to 1 million barrels per day. So I think again the PMT, the Panna Mukta field, which is shut down in this quarter, it will be operational, but its positive effect will be nullified by shutdown in refineries. So I think the third quarter result will be subdued, and there may be a decline in refining margins, and in petchem margin also I see some as the more capacity additions are coming up from Southeast Asia and China. So I think there will be pressure in the petchem margin also, and in oil and gas, like the PMC field will be operational well. So oil and gas will be do as in the June quarter. So on the whole, the quarter will be subdued. There will not much of excitement in the third quarter.
Rina, what's your price target on the stock right now? And looking at these numbers today, do you think there's a reason to perhaps up those estimates?
No, I think we have recommended hold on the Reliance Industries with a target price of ₹1133. And looking at just the flashed numbers, I think the target will be remain same because the results are also better than my estimates, but it's in line with average estimates. Like it's marginally up. So there is nothing drastically has been changed. So, okay. And given the guidance for the kg basis volumes, we have to revise our target price on the basis of that.
Sure. So right now you're staying with 1133 with a hold rating on Reliance Industries.